Microlending represents a significant shift in providing financial services to those typically marginalized by conventional financial institutions, originating in developing countries and gradually gaining traction globally, including in developed nations such as the United States. Microlending focuses on offering small loans to individuals who traditionally lack access to banking services. Microlending began as an innovative financial solution targeting populations often ignored by mainstream banks, such as the impoverished, women, and aspiring entrepreneurs without assets for collateral. The cornerstone of this approach, pioneered in 1983 by Muhammad Yunus with the establishment of Grameen Bank in Bangladesh, is providing modest, often unsecured loans. This strategy stands in contrast to conventional banking, which focuses predominantly on financially secure clients. Yunus's groundbreaking work, which was acknowledged with the Nobel Peace Prize, demonstrates a belief in the potential of financial empowerment as a catalyst for economic growth and peace. Microlending operates through the issuance of small loans, generally ranging from $100 to $1,500, often accompanied by interest rates averaging around 31%. These funds typically support a variety of entrepreneurial endeavors. To ensure repayment, microlenders utilize unique methods, such as employing local agents for collection, who often travel by bicycle to engage with borrowers. This personalized approach, coupled with the use of community-based social pressure, forms a stark contrast to traditional banking methods and the harsh practices of predatory lenders like loan sharks. The global influence of microlending in reducing poverty is substantial. It has enabled countless individuals worldwide to initiate or expand their own businesses, thereby improving their economic independence. This impact is not limited to developing countries. In developed nations such as the United States, microloans have been instrumental during economic crises. For example, during the financial turmoil that began in 2008, the U.S. government amplified its microloan program, recognizing its critical role in sustaining small businesses at a time when conventional banks were tightening lending standards. Despite its successes, microlending faces criticism and challenges. Some research disputes its efficacy in eradicating poverty, and concerns have been raised about the potential for creating burdensome debt among impoverished borrowers, particularly in the context of higher interest rates. In the United States, microfinance has yet to experience the rapid growth seen in developing regions, but it holds significant potential. A notable portion of American households, especially in communities of color, remain either unbanked or underbanked. Research, such as that conducted by MDRC, indicates that microfinance can be effective in developed economies, aiding low-income individuals in establishing businesses, improving their financial situations, and gaining access to mainstream financial markets. A major hurdle for microfinance in the U.S. is the existing regulatory framework, which does not adequately address the unique characteristics of microfinance institutions, MFIs. These institutions typically serve high-risk clients lacking traditional credit histories, a demographic not catered to by standard commercial banks. To encourage the growth of microfinance in the U.S., it is imperative to establish separate yet responsible regulatory structures tailored to the specific risks and operational models of MFIs. This approach should include modifications to usury laws, appropriate capital requirements, and strong regulatory oversight to prevent exploitative practices. Beyond individual empowerment, microlending has broader implications on economic systems and global peace. By providing financial resources to start or nurture small businesses, microlending injects vitality into local economies. This form of grassroots economic empowerment aligns with theories suggesting that economic interdependence among nations reduces the likelihood of conflict, as trade becomes too valuable to jeopardize. This perspective was a significant factor in the decision to award Muhammad Yunus the Peace Prize, recognizing that poverty alleviation is integral to achieving lasting peace. Microlending operates on the principle that access to capital can lead to self-sufficiency, thereby breaking cycles of poverty. The emphasis on lending to traditionally marginalized groups, especially women, reflects a commitment to social justice and equality. The success of microlending in elevating the status and economic well-being of these groups underscores its transformative potential. Online platforms now enable individual lenders worldwide to fund microloans, enhancing the reach and efficiency of microfinance initiatives. Websites like Kiva.com exemplify this trend, allowing users to contribute to loans for entrepreneurs across various countries. This digital evolution has expanded the scope of microlending, making it a globally interconnected phenomenon. The landscape of microfinance institutions, MFIs, is diverse, encompassing both for-profit and non-profit models. For-profit MFIs like Microplace.com offer an avenue for investors to earn returns while contributing to social causes. In contrast, nonprofit MFIs attract individuals more inclined towards social responsibility, offering loans without the expectation of financial gain. This dichotomy reflects the varying motivations of lenders and the multifaceted nature of microlending as both a social movement and an investment opportunity. For microfinance to thrive responsibly, particularly in the U.S., there needs to be rigorous oversight and regulation. This includes recognizing MFIs as a distinct category of financial institutions under laws like the Federal Trade Commission Act and the Consumer Credit Protection Act. Such recognition would help protect borrowers from abusive practices and ensure the stability and integrity of the microfinance sector. The establishment of a regulatory body, either at the federal or state level, would provide necessary oversight, ensuring transparency and accountability within the microfinance industry. The effectiveness of microlending also depends on its adaptability to various cultural and social contexts. Practices like group lending, prevalent in many developing countries, may require modification to align with the social dynamics in places like the United States. This adaptability is crucial for microfinance to be effective across diverse settings, catering to the unique needs and circumstances of different populations. Microlending represents a paradigm shift in the approach to financial inclusion, empowering individuals and communities traditionally excluded from conventional banking systems. Its impact extends beyond financial assistance, contributing to social equality, economic development, and even global peace. By continuing to adapt and respond to the diverse needs of populations worldwide, microlending remains a dynamic and vital force in the quest for a more inclusive and equitable world. If you learned something new, please like and subscribe.